What's up, Mike? Good morning. Okay. All right, we'll be bullish this morning. See if we can get that CPI high. I like that idea there. Buy side, cool. Gonna grab the coffee real quick. We'll get it set up. 1 hour. We're back. What's up, dog? Finally back, right? Hey, we'll be more consistent on the YouTube. Starting this week, huh? Okay. So yeah, we've been pretty much, as we say, higher time frame, not really much to look at. We've just been range bound forever, it feels like. We do have a little 4-hour fair value up here. We haven't got into that yet, or the 1 hour. We've gotten into the 1 hour, but we haven't just picked up that low yet. So I wish we would have picked up that low first. Would be a little bit cleaner to trust the bullish run here. But we did pick up this short-term low and held that range. So that really could be all we need. Especially because we've retested the high of this 1 hour fair value gap multiple times already. So now that we've cleared the short-term low, if we can displace away from it, especially close above it, this 15-minute should close now. So it's going to close back above the 1 hour. Yeah, we should see that expansion. 9:30 right now. First test would be midpoint of this wick. That's the 8:30 opening CPI. Should see hesitation there. Ultimately, we see expansion through the buy side. If we stay aggressive, let's see what else. I don't mind this up here. This inefficiency. So a few objectives, but we prefer a run higher this morning. One minute. All right. So I was thinking we could probably get into this mitigation block here. Right, we have the bullish breaker. Low, high, lower, low. We close above it here with this candle that turns this into the bullish breaker. If we're bullish, we'll often see bullish breakers being followed by mitigation blocks just by structure. Right, so we hold now this low, expand again, breaking this high, leaving the breaker, creating a new mitigation block here. You notice that as we close above this for the first time, we actually never get back into that. So we hover right near it, we accelerate away from it. That's the discount that we can trade back into and still hold. We get below that, we'd be a little bit more bearish. So if anything, we're looking for a bounce into this mitigation block, ideally picking up a short-term low. If we can get a long off of that, then we'll try to capture that release into the buy side up top. Let's see, higher time frame, 5, okay. Let's say that we run into this buy side first. We'll still wait for a pullback. I don't mind staying bullish. Currently, we're getting stuck at first presented. We have a new day opening gap here. Opening range as well, very small opening range. So that won't be much help. Let's say maybe if we can get above this new day opening gap, we should get that final release into the buy side. We already have closed above midpoint of the wick, I believe. Yeah, we have here. Okay. So we're going to continue to watch that. That level should support us if we're going to stay bullish. Elevate us right into that buy side. First thing we'll look for is closure above opening range, then first presented, then new day opening gap. We get all of that, should see buy side next. If we get stuck here, fall back into the mitigation block. I don't mind that. We'll still look for the long off of that, especially if we can get up or pick up this little short-term low that's sitting right here.
Recorded on 2 separate tracks, each one giving special emphasis to certain sections of the orchestra, as heard from those positions. Now, when played back simultaneously on 2 separate systems, the sounds are blended together to achieve a new dimension in sound, impossible to obtain in a monaural recording.
A little slow so far. We can clear this buy side. We might actually be able to target a run lower at that point. So 2 options here. We'll either wait for a pullback into mitigation block, or if we just stay bullish from here and hold this liquidity void that we've created. We hold that, stay bullish, run into buy side. We'll actually look for a pullback. See if we can't just stay range bound here. For now though, liquidity void is holding. Midpoint acting pretty tough. Not only is it midpoint, it's really that new day opening gap there. All right, so we got a whole collection of PD arrays, time-based, first presented, new day opening gap, and our opening range all in this consolidated area. Expect this little consolidation to occur. Ultimately, we should break out. We would favor a break higher. We'll label this for now just so we have it. So we got the first presented there. And then with the opening gap. All right, so we're looking here for now. Morning, Sharky. We fall back below liquidity void here, then at that point we'd want to see our mitigation block be retested. Ideally get some type of long off of that, especially if we leave this high intact. That's the CPI data high. That high didn't even clear any of the other liquidity. That's why I would like to target that. Normally CPI is pretty one-sided. This is more of an FOMC delivery. Runs up first, breaks down low, and now we're trying to come back for that high. So if that's the case, we're gonna look for that high to be the target to finish this little delivery cycle. That's also what I'm thinking. Once we clear this high, if we can get this external range while holding from here, right? So like if we just hold, accelerate, don't give any retracement, I like the idea of trying to get short after clearing that buy side, because now we'll have a lot of higher lows, right? Ever since we cleared liquidity here, no lows have been cleared. So we have this low, equal lows, higher low, higher low, higher low, higher low here as well. Next higher low again, new swing point created, higher low here. So now if we can hold midpoint, accelerate, that'll be what, 5 or 6 higher lows in a row that we can then target on the way down. Following this displacement through midpoint, we should see midpoint try to hold us. This is the first time we've closed above midpoint of the first presented as well, this fair value gap. So that should also hold us. Now we look for closure above. If we get that, we should be sitting pretty good to release into that buy side there. NQ is already far above that here. We've displaced that with the fair value gap. So I want to see, we would like bullishness in both. Pull up NQ real quick. All right, so this high, we've already displaced through that. We left a fair value gap there. So we'd actually expect more bullish delivery, which should get ES up into that buy side there. Holding midpoint of that now. We have yet to get above. Still waiting for closure above. There we go. Closure above, opening with a bullish volume imbalance that stays open. We'll be chilling. If anything, we should see price return into this first presented, accelerate away, leaving the volume imbalance open. Then that volume imbalance will be used as a discount to accelerate price into the buy side. So let's see. Not worth it off. If we had more range, we would look at that potentially, but at this point, we'll just wait for the liquidity. Wait for some liquidity to be cleared, and then we can decide. If we displace through that, right, so let's say that we close above, leaving a new discount, we'll expect bullishness to continue. If it's simply a run, it creates a wick, we close inside the range, we'll look for price to pull back below midpoint of this wick here. For now though, should see first presented hold. It did hold beautifully. Still pretty choppy in here, so that's why we're waiting. Said we can expect range bound delivery, a lot of high resistance delivery. Buy side is expected. That's the expectation, but getting up there, we're also expecting high resistance into that buy side. So a lot of give and take. We don't really expect many inefficiencies created within here until buy side is cleared. It'll be like a slow grind higher. And then once price is ready, we'll probably see 1 or 2 candles that just shoot right through that buy side liquidity. Attack it aggressively. Still holding the original idea. If we fall all the way down in here, we're fine trying to get long off that. Especially seeing this negation candle here, right? So we opened with the volume imbalance after closing outside of our new day opening gap. Very next candle negates that, closes right back inside. Now we're getting that fall through. So if we get closure below, we actually would favor a return back into this here. Last line of defense for this current low consolidation would be this liquidity void. So we'll see if it wants to wick that one more time. But for now, it's still just real ugly inside that new day opening gap. We have not moved outside of that since the opening. So this is the candle that opens us. We've been inside our opening range the entire morning so far. We actually wouldn't mind a pullback because relative in ES, right, we would also expect this fair value gap to hold us here. Quick look at ES, right, as we break through that CPI wick, we're leaving this fair value gap. If we're going to stay bullish, that should hold. So now we're looking for pretty much the same discount. Different PD array, right? This is a mitigation block opposed to the fair value gap, but discount array nonetheless. Same relative position with where we are currently between the two indices. We're looking for closure below this new day opening gap. If we get that, especially closure below the volume imbalance as well, we should see it fall. So we close perfectly on that volume imbalance. We have, however, left a fair value gap volume imbalance combo. So especially after negating at the high, clearing the short-term high, we should see a little sell-off here. We could tape read something like this here. But this would be a quick scalp that we would trust. Nothing spectacular, but low-hanging fruit. We should hold our new day opening gap low. This high should be protected, and we should see our mitigation block be traded into here. Let's just clear some of that up. So we watch that short. Ideally, right, I'd use the volume imbalance. Stop would be that high there. Yeah, because that's actually first percentage fair value gap today too. So something like that we could look at just to see if it would want to hold. Oh, that. Acceleration into it. We'll see if it can hold that. NQ didn't get into its fair value gap either. We'd like to see that. Ideally, don't want to see expansion through this new day opening gap at this point. We have two sets of new day opening or first presented now. Current first presented from today. Previous first presented. Both of those should hold. Nice swing high, beautiful. We did close above this liquidity void, so if this candle can get back below it, we'll be sitting pretty there. Especially if that's no wick to the upside. Complete negation, right back below the liquidity void. We should see this fair value gap, or excuse me, this mitigation block here. Nice, that's pretty textbook. You said nothing spectacular, but that's a run you trust, at least from new day opening gap into this here. We still have not picked up that low, right? So struggling to pick up lows still. It's also why I would still like to see the short-term low being cleared, wick into the mitigation block, and then look for a bounce from there. NQ still struggling as well. So we'll wait. At this point, nothing to do until we get mitigation, or we have to close back above new day opening gap. Ideally for us, we'd rather see short-term low cleared, return back into this here. On a higher time frame, it's a 5-minute fair value gap as well. That's why I like that. Higher time frame inefficiency. Higher time frame bullish breaker also. So a lot of discounts in here. If it creates some type of long opportunity, we'll feel comfortable in that. For now, we could hide that. All right, there's a short-term low. Can we get our mitigation block still? Okay, should be completion. There it is. Yep, closure below. Beautiful. So there it is. Now this is where we would like to see a bounce ideally. We still fell short of all this buy side up top. One thing to note is, however, NQ did clear it already. So potential SMT, especially if we fall through this first presented here. If we fall through this mitigation block, if NQ falls through this first presented, we're going to be looking a little bit more bearish at that point. And we'll actually have to see if we can't catch a continuation into some of these lows down here. First presented holds bearishly nicely so far. Let's see what we get at midpoint. For us to get long, what we would like to see, a few different possibilities for entries, of course. So there's, of course, we can create a low in here, run that low, close back above. We'll feel comfortable entering in that. If we leave this inefficiency open, which it looks like we're going to, we're fine with seeing if this holds, right? If we invert that, we're fine going in right away on that as well. So another opportunity, inversion play. Okay, yep. Holding midpoint, I like that. As we said, we're looking at this. This fair value gap's also created as we break a low. So that's another thing that we'll like. There's a low there as well. If we can invert that, we'll go in right away on the mitigation block. Admittedly, I would like to see a short-term low being formed and then cleared and then the expansion. That's always just a little bit cleaner as far as delivery, but still holding nicely here. All right, that fair value gap is created. We'll see if we can create some type of swing low here first. Looking for the swing low to form. This needs to hold. Wait. That's all right. Oh, okay. So still no low. We'll see what we do once we get to the bottom of this mitigation block here. NQ is trying to leave that fair value gap there. Close below it. Could be dangerous. NQ closes below. We'll see if ES follows. If we follow that, closing below this mitigation block, these lows are going to be in question. At this point, since we've completely repriced into the low of our mitigation block, if we can close above it, we'll use that for entry. These shorts here work nice. We did take that, right? We used the first presented just into this mitigation block, as we kind of showed with the tape read. We trusted that pretty strongly that that would hold. I'm gonna show that quick. So we said, right, we were just waiting. We want to see price get above that, but short-term high cleared, breaking below new day opening gap, leaving first presented and volume imbalance. Pretty clear-cut short. So we get short just on the retest of first presented, and then we close as we trade into the mitigation block. So what was that? About 10 handles secured quickly this morning. That's fine. We still have a chance too, so we'd still like to see bullishness. So if we can invert this, we'll go back in actually, capture the short, look to capture the long back up. Okay, we like that. Fair value gap here is we left in NQ. So if we're going to be bullish, we want to invert this in NQ, and then ideally get back above the actual fair value gap. I think that was its first presented. No, it was not. Okay. So the short as well was still its first presented. That might run without even giving us a chance. God damn. So that's pretty much what we wanted to see. Hit the low, expand away, close above, and then get a retracement. But that's pretty aggressive. That might just go. We like that. We'll throw this one in here so you could see that. Okay, so we like this here. Here's some of this stuff up. Pretty much we're just going to use that mitigation block, look for a retest. Funky wick, we're being honest, but we still did close above. We left a fair value gap, so we'll go in here. That rejection wick is a little sketchy. It's a pretty good release. So yeah, if we can actually even get that high, that'll be first partial right away. Oh, don't want to do that. We'll look to get back up into new day opening gap using first present or this fair value gap here, mitigation block. I think first presented should be hit again, actually. We'll use this here. Or do we just go for 10 exactly, maybe? 10 would get us back into first presented. We'll be a little greedy. We already had a nice short. Be greedy with first partial. See if we can't get first presented retest. Don't want to see new day opening gap. First presented instead. Buy side for the final closure. First thing we look for, swing low entry. Maybe. Next thing we look for, closure above midpoint of the wick. Worst case scenario, we trade into that, we reject hard, we run for this low in this candlestick here. Or really with any candlestick. If we see any candlestick run into that and reject and run for that low, kind of like we see there. We're not going to like that. Especially that's not even able to get in there. Still waiting. But we expect this mitigation block to hold. Retesting that little inversion in NQ there. Midpoint of our mitigation block in ES. Good levels. Midpoint of the 1 minute as well. So we're sitting pretty good. No stress at all. Closure below midpoint of the mitigation block, then we'll be a little worried at that point, but for now, all's good, all is well. We look for closure back above mitigation block. That'd be beautiful to see. Then we want to confirm that by holding it with the very next candle. So this candle closes above, we want the next candle to trade into it, hold it, respect it, also close above. If we stay inside of it, we're getting a little bit more range bound, so there's a good chance we just consolidate here, or it actually does want to get lower. So at this point, we would love to see price respect this mitigation block, close above it again, then see expansion into midpoint here. This will be a pretty dangerous spot because we have a short-term high and we have midpoint of the wick. So if we don't really want to truly get bullish, these are the premiums that are going to try to hold us. As we run out this high and hit this wick, we'll look to reject and return right back into our mitigation block if consolidation is the key. So to feel good, what we want to see is expansion above that level, closing through it, ideally with one candle. Like we don't even want to see one candle test that. We'd want to see one singular pass through it and above it, closing above it. We'd feel pretty confident at that point, and then we'd look for the expansion into our first presented there. Need to see some speed, because the longer we stay here, we often talk about this. If we start getting like stair-steppery or we start just consolidating here, it's very easy to just fall right through these lows here. So if we're going to create this type of delivery where we're starting to put in higher lows, right, higher lows, we need to see a quick movement away so we don't spend much time near these lows. That's the expansion we want to see. As we said, we want one singular pass. We don't want rejection here. Beautiful. That's exactly what we want right there. Perfect. I mean, that couldn't be better. Perfect. Now we can actually go all the way cost covered. We've already partialed out beautifully. That becomes a new discount. Risk-free trade. Final target here at buy side. And that'll be it for today if we get there. Quick morning work. So now we just need closure above first presented as well. Right, we're right back into that original consolidation area of the old first presented, the new day opening gap, and today's. Look at all these PD arrays in here. So once again, if we're going to get up here, which we want to see, it could be high resistance because we have to get through all this. Because we've already spent so much time here, ideally, if we are bullish, what we'll see is we'll create a discount, which we're about to right now. We'll make a quick pass into that discount, and then we'll see acceleration through all of this jumbled mess that held us originally. If we see that, we might even be able to open up this exit here. So that'll be pretty bullish, and we could even push from up here. So we'll leave it here for now just to see how we interact. Listen, if we do trade into this fair value gap and push right through all of this, we'll open up this exit. So that'll be pretty bullish. Let's clear some of it up. Pretty much, we just need to see the last line of defense, which is this first presented here. Let's say that we push through all of this, leaving this open. Same idea, because that'll be a breakaway. We'll be fine opening up that exit a little bit and just going for... Okay. Never mind. Damn. That's fine, though. God, we knew it, too. That was just... Yeah, that's all right. Can't be upset. TP absolutely smashed, so... We ain't complaining. God damn, maybe we are complaining because we could have had that high easily. Gee. All right, well, from here, I should say should, right? We expected that acceleration, but not that much, to be honest. But hey, that's good though. Beautiful trade. Honestly, that's extremely bullish. We might try. We got a little positive slippage too. We'll go in with one contract here. We don't want to give all the profits back. But I think we can stay pretty bullish here. So we're going to try to just go one contract, get a little 1 to 2, little cherry on top, get this buy side up top here. Yeah, okay. See if we can get that. So let's go. We'll use this here. Just one. Very minuscule. It would capture a little continuation trade. At this point, don't even want that fair value gap fully retraded into, so we could just use the buy side. We should see some of this fair value gap be left open, and then we'll close fully right there at midpoint. If we get stopped here, we'll just call it. Like, this is kind of just trying to capture one little release. Oh, I was hoping for the buy side touch, not institutional order flow here. That'd be unfortunate. Give it a chance. All right, we're in. Wait. Now we're in. Ideally from here, we just get expansion. All of this now, balanced price range. From this high to this low, EPR. Boop. All this here balanced. So as we trade into it, that's why our stop is pretty much the low of this fair value gap. We're trying to use that balanced price range. If we want to fall all the way back down into the range, more than likely we're just gonna, come back into this range, stay range bound, and we'll be content with where we're at. Cool. All right, so quick stop there. We get back a little bit back, looking for that continuation. We're okay with that. And that'll be all. All right, at this point, if we're gonna come back into this range, as we say, more than likely we just stay inside of here. On a higher time frame, it is pretty ugly still. Let's hide everything just so you could see. Yeah, right, higher time frame, not much going on there. Eee, a little gross actually. We'll leave you out with that. Nice little morning sesh. Dun, dun, dun. We'll go over a quick recap. Let's hide this. So coming into it, the whole intention and the whole goal was to see price return into this mitigation block to then expand into the buy side. So it's beautiful when things work out exactly as you kind of expected there. As far as the delivery into it, we were looking at this new day opening gap. We first took shorts into that as we left this fair value gap open, volume imbalance combo, leaving the new day opening gap. Real obvious shorts, as we mentioned. So that was just a quick short into this mitigation block because we're still looking to be bullish. We capture that short, price trades into the low of the mitigation block, displaces back above. That was one of the entry models we were speaking of. As we do that, we leave a bullish fair value gap. We go in there, no hesitation. We're already expecting this to be a discount. We've fully repriced into it. We've displaced away, rebalancing it. No need to fight against that. So we get long there, stop loss right below, and target the buy side now. First partial, just at that new day opening gap once again, in case we got stuck. We actually went to first presented on that. So first presented, and then final exit there at the buy side. Try to capture one more release into this high here. One contract, get stopped quickly. And because of that, we'll call it there. Dun, 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 dun. Yeah. Appreciate you guys hanging out. Sharky, hey, we'll be back more. We will. Because we are kind of in the works actually with an affiliate, which is why we're starting the YouTube again. So we won't say too much, but we'll definitely be more consistent. At least one every single week on YouTube, for sure. Could be more. We'll watch this, see if it stays bullish actually. We might have just had too tight of a stop there. But no, yeah, we'll be consistent now. One a week at least, so. Grow the following. I do believe I have some knowledge that is helpful for others. Not even knowledge, maybe just the way you communicate it, right? I think I can communicate it in a way that helps people understand pretty simple. And that's always nice in trading. 10:06, we'll hang out to like 10:15 here. No more trades. I just kind of want to see if we can get up there into that buy side too, or if we're just going to stay range bound. So at this point, new day open gap. Hold us all morning. We displace above that. That becomes a discount. So we'll watch there, see if we can get up. One thing we need to see is if we do want to get bullish, we'll have to reclaim our buy side here. So notice that we left fair value gap volume imbalance combo anchored to that perfectly. That's not random. We trade back below. We use that. Now we've traded into our new day opening gap. Midpoint still holding, however. Expansion back above buy side. That's actually a pretty clean longing opportunity there.
Each one giving special emphasis to certain sections of the orchestra, as heard from those positions. Now, when played back simultaneously on two separate systems, the sounds are blended together to achieve a new dimension of sound impossible in a monaural recording.
Which we might actually have double stream today. Usually for CPI, I like to trade the afternoon also, so might come back for power hour, just do a little hour stream in the afternoon. At this point, now that we've held the buy side, okay, we've already displaced through that buy side fully. If we're going to be bullish, this fair value gap should not be inverted. So we're watching that. If we close below this fair value gap and this new day opening gap, honestly, I do like these lows still. And I would look more for a short back down. Using these highs, let's start clearing this up. These highs should be protected here. If we close below this fair value gap and new day opening gap, that should hold. Especially if we leave our opening range again. First time coming into this 1 minute fair value gap here. So don't want to jump the gun too soon. Watch the reaction we get here. Because like if we trade into this and hold the new day opening gap, good chance we still want to stay bullish, kind of like we saw there. And we just have to give a deeper retracement. We've anchored this up close candle inside midpoint of now this fair value gap. So if we do invert this, that up close candle will become the premium that should hold price. We can look at it early now and see if it wants to, because we've already closed below midpoint. Right now, all the attention's on this fair value gap here. So as we said, we've closed below midpoint already, and that up close candle's anchored there. So that could hold us to start. But if we close below the fair value gap, then this definitely should hold us at that point. Any retest should be met with rejection. Look at that, first closure below. This candle also needs to confirm that though. This is where we can see this candle run up into this up close candle though, and then reject. If we saw something like that, we'd be pretty confident that price wants to run bearish again. Okay, trying to stay below, confirm that. Yeah. So now at this point, I'm leaning a little bit more bearish. We're not fully convinced yet, just because we still have all these in here. Any one of these can absolute rocket price higher. Closure below this fair value gap, then we'd feel extremely confident and we'd be okay going in like this to come for a low. at least the 1 hour. I really think it wants to just come back for this 1 hour again. That's been like its safe place, right? Anytime we get away, boom, right back into it. We get away, right back into it. Huge displacement, right back into it. Failure swing, right back into it. So that seems to be its home base, wants to return there. Which means it's pretty safe to assume we can close below this fair value gap. First closure below new day opening gap. That should send price lower, to be honest. Yeah, look at that perfect touch of it. Closure below midpoint, below fair value gap, easy release into that 1 hour there. Wick becomes the new discount. Up close candle did hold. So now we're just following. Up close candle held here. Boop. Wick, that looks closed below. That's the new discount there. And we could disregard this 1 minute fair value gap because now we'll be focused on the premiums. So let's see if that can be created there. Nope. First test of new day opening gap as premium since we've closed below once, twice. We didn't get below the wick, but if we are going to get bearish, new day opening gap, we'll try to hold and send us below that wick. For now, because that swing low is in place, still have to trust or assume that it wants to hold that low and try to run higher. All right, interesting. Fully. We leave that open. Looking to see, okay, nope. If we could have left that open and closed above our midpoint here of that new day opening gap, we would have entertained the idea. We'll still watch that. So at this point, let's say that we are going to want to get bullish. We've completely repriced this current low to high. That's the current dealing range. This low to this high. We've repriced into the very last discount, which is here. Fully. We then leave it holding its midpoint, closing above. So we would watch and see if that's the protected low. I would like to see that low get cleared personally. Like, I don't want this to be a protected low. I'd rather us work into this 1 hour fair value gap. Completely pretty much giving this entire range. So I like to see this be more of a bait where we fall through that low. We wouldn't actually want to take that one long. But the framework is there. We'd like to see new day opening gap hold, break another low, return into the 1 hour. And then from there, if you want, then we could see another long opportunity. But the hourly is provided pretty much an opportunity every single time it's traded into that. bullish breaker run, fair value gap run, bullish breaker run. Yeah, so it's been pretty consistent actually. Nice. Fall through the fair value gap. You said we're not trading because we expected this delivery to occur. We already delivered into the external range. Notice that after we did that, where did we first start to consolidate? Right at midpoint of that low to high. We smashed right into it, returns right back into that. Now we're just sitting around there. So I think we will call it, if we can get into the 1 hour. I just want to see that pullback, and then we'll go ahead and be content with that. Can't lie, just trying to get the hour stream time. We need to stream for an hour. Displacement here would be interesting. Said we're just wicking the low. Anytime we've taken a low so far, it's been a wick. So not much authority lower. Right, starting with this low, we wicked it. This low, we wick it. This low, we wick it. Would like to see some follow through. Still want to see a run lower. Just pretty high resistance. But that's one of the signatures. Anytime we're running a low, no true follow through or closure. Simply a wick. We still expect it to hold though, so new day opening gap should continue to offer us resistance. We'll see if we can't get a pretty sharp run lower through these. Five-minute chart, disgusting. That, yikes. Very indecisive. So we had success, but there's not really any true bias at this point. Right, we just continue to, as we said earlier, consolidate near all these PD arrays. Anytime you see a stack of PD arrays like this, especially time-based, and what that means is like time-specific PD arrays, right? So like first presented fair value gaps are time-based. Opening ranges are very time-based. New day opening gaps, things like that. Anytime you have multiple in one area, you could almost always guarantee consolidation. And we had the 8:30 opening too. I didn't even notice that. Okay, it's ugly. We'll be good there. No need to watch it move sideways. And then once we leave, it'll move, just so you guys know. That's usually what happens. Actually, that's always what happens. But no, we'll be good for today. So yeah, I appreciate you guys hanging out this morning. Nice to be back on the old YouTube. We said it'll be a lot more consistent going forward, at least one a week. Maybe more depending on the schedule and things like that, but we'll be back in action. For those in the Discord, we'll start our week, or we'll keep the week going tomorrow. Let me just double check real quick. High impact news Thursday, high impact news Friday. Nice. So yeah, pretty normal week to end the week. We'll stream tomorrow 9:25, and then on Friday we'll go about 9:50, just before that 10 o'clock news. But until then, hope you guys enjoyed it. We will see you guys around. Stay safe. Have a great afternoon, everybody. And for those that are in the Discord, we will talk again tomorrow morning, bright and early. See you guys then. Yeah, I got you, Mike. I got you. I'll set them up. Hasta la vista.